All right, good evening. I need to apologize. We had a glitch. I don't know what's going on with I can't even start here. With GoToWebinar. Uh it froze, shut down, couldn't get back in, so I apologize for those who were with me before. But welcome to the Hurley Investments Market View commentary for 9/11/2023. We started going through a couple things I wanted to go over with you tonight. First of all, I asked the question, will we have a strike for the automakers union? And the short answer was yes. We thought we were going to, as I asked the individuals that were with me. Workers want a salary increase of 40% and have negotiated to 36, while the companies wanted 7% and negotiated to 16%. So they still have a 20% increase in salaries that they want, is the difference between these two. So will we probably have a strike on Wednesday? If you were to ask me, yes, we will. Now, 10 working days loses 5 billion in GDP. And the short answer is if all 146,000 union workers strike. Now they may do some targeted strikes. The fact of the matter is Ford is probably the best set up for a strike because they do some union workers, some salary workers, and some what they call hourly workers. So because they're willing to work hourly workers, you're going to have some Ford workers that are not involved in the unions that will still show up to work and will still be able to continue to keep their factories running. The weird part of this that I'm not understanding, how do they justify a 40% salary increase? And what I mean by that is not that their jobs aren't important, but it's repetitive work. It's factory work. It's work that doesn't necessarily require a technical skill to do. It's factory work. It's putting pieces together. And again, I'm not saying that it's not important work. I'm not saying that it's not hard work. I'm not even saying that it's not skilled labor, because it is, but it's trainable skilled labor. It's not super hard. So that's something that I'm just thinking about. Worse news, right, is that pre-COVID average, what did they call it? Average, I don't know if it was average, but pre-COVID, 38K bought you a full-size vehicle. I can't type very well. Vehicle. And now and now the same vehicle is 52K. And I'm getting this information off of the last trade from CNBC. So that's where these numbers came from. I'm a little shocked. You know, it cost If you want to get a fully loaded Ford Expedition, it was $96,000 to $98,000 2 years ago. If you're looking at a Ford Super Duty, you're in that $109 to $135 range. Some of the cost of cars are ridiculous. It's a ridiculous how much you'd be paying for some automobiles. Being September, and I guess the short answer is being in September, this will start the next leg down for this month. Last week, I'm pretty sure it's 1.26 that we were down on the S&P 500. I'm going to put that S&P 500. NASDAQ was down worse. It was a bad week for the NASDAQ. Nice to see the NASDAQ recovering today. In fact, if you looked at your accounts, NASDAQ moved the markets. So the second thing I was going to bring up, and it's kind of second and third combined, and I'm going to say this gently. I was asked if Hurley Investments and myself are woke. And I'm assuming the premise behind this was, I guess it was asked because I invest in Disney. And so I kind of sat here and I was like, really? Because I think I invest in Disney, you think that maybe I'm woke, and maybe that's not a reason to invest with Hurley Investments. So the short answer there, and I'm going to go ahead and say it out there, is no. We at Hurley Investments do not believe, and I'm just going to say the woke thinking. That's probably not the way. The woke, I don't know how to say it. The woke thinking. Let's just put it that way. I was going to say methodology or what have you, but no, we don't believe in that. With that said, we do believe you can make money with companies that maybe you don't believe in. And some of those that you guys might think of, well, Kevin, what do you mean? Fundamentally, Disney is a great company. Fundamentally, we have Disney that can make a ton of money. I showed you last week or the week before on what opportunities there are in Disney because their cash cow is still their movies. Now, Kevin, what do you mean? You might not believe in smoking. You might not believe in drinking alcohol. Alcoholic beverages. We'll call it alcoholic beverages, right? You may not think that it's good to be in any companies that were related to COVID shots. But that doesn't mean you can't make money in TAP or Modelo. TAP is Coors. It doesn't mean that you can't make money with the smoking. What was it? Oh crud! I'm just having a brain fart. But in those companies, the COVID shots, you can make money in Pfizer. You can make money with United Healthcare. Uh, just because you might have an issue with a company, I'm going to make the comment, this is why you probably shouldn't be married to certain stocks. You shouldn't be married to certain stocks because the reality is we're here to make money in the stock market. We're not here to like every company that we invest in. Our goal, how much money can we make in regards to those companies in our portfolios? And there are some companies that ethically or morally, I guess not ethically, morally you might not agree with, but that doesn't mean you can't make money on them. And that's our goal. Our goal is to make money on them. It's funny because for a while we were in Smith and Wesson, and that was pre them turning into camping gear and so forth. And people really took an issue. I can't believe you're investing in Smith and Wesson. For a time, especially when there's a fear of restriction of guns and ammunition, there were runs on guns and ammunition, and Smith and Wesson was making a ton of money. It was a really good company. They haven't done such a good job of moving into camping gear and so forth. But Smith and Wesson did a great job of making money in the Obama years when there were restrictions placed on guns and there was talk of restrictions being placed on ammunition. They killed it. It was a great investment, and we ran with it. A lot of people talked about Ford. Ford ran up to a couple years ago 25.87 I think was the high. We were fully valued at 25.55. So yes, there was a time when we sold off half of our shares up at 25.55 to 25.25, and we did the best we could to make as much money as possible with them. And Kevin, why didn't we sell off all the shares back then? Well, at a certain point, we weren't sure if we were right, but we knew Ford mathematically was fully valued. We sold off. In fact, it might have been $25.55 to 65 cents. It got up to like 25.85 or 87, and as soon as it hit that number, I got the alert and we sold off some of our shares. So the second/third thing, no, we're not woke at Hurley Investments, but that doesn't mean we can't make money on some companies that might have some woke tendencies, some woke advertisements. But no, we're not in Budweiser. And some companies that are really blowing it, yes, we are staying away from. Disney is not one, though. We still do believe in Disney. So hopefully I'm answering those questions accordingly. All right, here we go. The big picture hasn't changed. People are a little bit, well, how do I say it? We're uncertain what's happening. We're uncertain what's happening. With that said, the reason why we're uncertain is we're really expecting some CPI numbers to come out. Kevin, you don't have very much in here. Oracle has earnings. They did awful. They were down over 9%. And then on Thursday, we have Adobe, which should do good. And what was the other one? And Lennar. Lennar that should also do relatively well. So there's not much on the earnings spectrum. But for reports, new economic reports today, none tomorrow. The big ones will be CPIs on Wednesday, PPIs, and retail sales on Thursday. Friday, Empire Manufacturing. But again, the big push right now will will the auto unions go on strike, and how bad will that hurt our economy? It's pretty interesting. If you're looking at our charts, since Friday, we've had a little bit of a bounce, right? Notice, though, we were just in no man's land. I'm going to grab a pen. I'm going to use, let's use black. Let's use red. Let's use black. If we take a peek, we came up to that 50-day and we couldn't get above it on the Dow Jones Industrial Average. All we did is we went down to a small level of support we were building for about a week and a half in August. How to bounce up? Could not get above the 50-day simple moving average, which was at 34,797. We finished at 34,663. So pretty, technically speaking, pretty disappointing looking at the Dow Jones Industrial Average because we could not break the 50-day. So tomorrow we're either going to test it or we're going to head obviously back down. More importantly, on the S&P 500, pretty amazing. We just broke above it. So now we're going to have mixed indexes, right? We finished today at 44.87. The 50-day is at 44.80. We finished 7 points above where we should see some buying activity coming in. What if it doesn't? What if this all reverses on Wednesday when we have a strike? Then our expectation is we're going to get back down to the 43.56. I will go through a couple things with you though here shortly, just so that we're all on the same page. All right. NASDAQ looks a lot like the S&P 500 and exactly the same thing. Finished at 13,917. The 50-day is at 13,877. We have a little bit of cushion, but really nice to see a plus 1% up day on the NASDAQ. All right. Again, not much happening this week. Some of you may have noticed Disney meta puts were off last Thursday. Disney protection was actually off last Friday, so I should put that in here. Pretty good because Meta had a huge day today. Meta up $10. Apple and Baidu and Boeing, we took protection off today. For those of you that don't know, Google has full collar trade, and it was announced today that the Department of Justice, and I should actually say, does anyone know? The Department of Justice came after Google today, and it wasn't the best of, well, it's looking pretty ugly for Google. And it's looking pretty ugly because they have an antitrust. I call it a lawsuit, right? The the Department of Justice has an antitrust lawsuit coming after Google. It did not affect them today. They're up 54 cents at a fourth of 1% today. But we do have a full collar on Google, expecting this to drag them down and to keep them below 140. If we were going to take a quick peek at a chart, I'm going to use FinViz because that's one of my more favorite ones. Google L. If we're just looking at a chart, expectations, it'll probably come down to the lower trend line. And if that lower trend line keeps moving, we're probably going to see it just come down and touch the 130. But that's what we're looking at for Google. It's had a nice run. We are expecting the antitrust lawsuit to start to drag it down. But we are protected and ready for whatever's coming up here. Okay. Still think September will be down 1.5%, if not more. I really think it'll be more like 2.25 to 2.5, but I'm sticking with my 1.5% at this time. I have a really interesting article. Kramer says stick with Apple despite reports of China government iPhone ban. It won't make much of a dent in Apple is the short answer, but stick with Apple. We're sticking with Apple. I have an article on what Jim Cramer says. And for those of you who maybe haven't understood the whole Disney, Iger, Chapek's secession mess, I found an amazing article that's pages upon pages upon pages. If you want to know why we're still in Disney, I think this describes it. Iger, interesting. Chapek's, matter of fact, cowboy. It was just rough. Made a mistake. Chapek's was not the man. Eisner was probably the better pick, and Disney has made mistake after mistake after mistake with Chapek's, which is rather unusual because he was thought to be the more I don't know, the more conservative out of the choices, and he just kept making mistakes over and over and over again. So some interesting things here just to read through. It's huge. It's so long, but this is where Disney's made mistakes, and it's very well documented. And last but not least, this was pushed over to me, and I wanted to go through this last. The yield curve. And it was funny because this was brought to me, and it probably came off of me saying, I don't know if I see a recession. If we do see a recession, it might be shallow. I think I mentioned it last week or the week before. It just came down to, I don't see a recession. I know things are slowing down. I know the numbers are, in my opinion, being manipulated a bit, but it was hard for me to see a recession. And then I read through this, and just their last comment when it comes to yield curves and market performance. In short, those who are doubling down on a soft landing / ongoing bull market call now are making a wager to an unprecedented occurrence, meaning that it hasn't happened in previous history. So my comment on not seeing a recession, and as I read this article that was brought to my attention, I went through the numbers. I just sat here and I was like, you know what? Because I can't see it doesn't mean it's not going to happen. And I think it's probably going to happen. So the short answer is we're looking for more protection. We're looking to protect, even though we don't have some protection right now, we're catching a small bounce. Yes, we are looking to protect. We really are looking for protection from now until the middle of October when we do think we're going to see a Christmas rally. But my call or my comment that, you know what, we probably aren't going to see a recession. Again, I've been given some information here that everything that's happened in the past says we're looking for a recession. And it could be the 7 to 24 month one. Averages is 14 months. I made the comment last week that it might only be 2 consecutive quarters and then we'll pick back up again. I could be wrong, is what I'm trying to say. I apologize. It was weird. I don't know what got messed up with GoToWebinar. I could not get back into it to rejoin our webinar. I believe it happened from a quick little power outage here where it reset the modem, but I was able to get back in within 2 minutes. I just couldn't get back into GoToWebinar. So I will get this emailed out to you. For those that missed tonight's commentary because of the freeze on GoToWebinar, I apologize, but I'm getting this out to you. I'll send it out to you via email. I appreciate you guys showing up and watching these. Until next Monday, take care. We'll see you on Thursday for the trade findings and judgments. Have a wonderful evening, and hopefully I'll do a better job of getting this live for us, obviously next Monday. See you then. Bye-bye.